Everyone, it's Tim here with the Markland Advantage of Berkshire Hathaway Home Services, Penn Fed Realty, a local real estate agent here in Bel Air, Maryland. And this is a new show called the TMA Connection, where we focus on local events, people and places, and all the good things going on in the community with a little smidge of real estate thrown in every now and then. And that's what we're going to be doing today, is going into a little bit of real estate, because we're coming up in 2021 into a buyer's market. And that some more inventory comes out for our buyers. And one of the first questions that a lot of people get is, where do I start? Like, have no idea, never done this before. Or we have some old timers that haven't bought a house in 30 years. And so today we're going to bring onto the show, our very first show, Mr. Ben Richards of Sierra Pacific Mortgage. Thank you so much for joining us, sir. Super excited about having you here.
Tim, thanks so much for having me. It's an honor to be the first of what is going to be a super successful show, I'm sure. It's Super Bowl Sunday today, so I felt like I was getting ready for the big game, going over my notes, and I'm excited to see what the conversation brings.
Yeah, who do you think is going to win the Super Bowl? This is going to probably air after today, of course, because we got to put this in post production. So who do you got?
So I'm going with the Chiefs. I think they've got too many weapons. Speed just absolutely spreads out a defense, and Andy Reid behind the helm with the play calling. I think they're a fun team to watch, and I'm pulling for them today.
Yeah. I think no matter what, I mean, I'm a Ravens fan through and through, so it's like, but I just want to see a good game. All right, but today we're not talking football so much. We're actually talking about, kind of getting people off on the right foot when it comes to starting to buy a home. And of course, one of those first steps is to get in touch with a lender. And so kind of what I just wanted to kind of cover today is like, what are those like top 5 most popular, most asked, frequently at FAQ, frequently asked questions, right? What are the top 5 questions that people are asking you when they make that phone call, when they have no idea of what's going on, or maybe they haven't bought a house in a while? So that's what we're going to address today. And let's see if we can drop some knowledge bombs.
I hope so.
All right. So let's kick this thing off with number 1. Like, what's one of the first things that people are asking you when when they call you?
So the first thing that I think comes up a lot, obviously the conversation, is based around money. So the first thing that typically comes up is, how much total am I going to need? Typically, people are familiar with the necessity of having a down payment, which is a good start. But then beyond the down payment, there's some other things that go into purchasing a home where you might end up bringing a little bit more than what you expected, for your down payment. So it's important for us to educate early in the process, early and often as possible, so the buyer is comfortable and confident with what they're getting into when they make that, that purchase.
Yeah. I think one of the biggest misconceptions that you can maybe clear up for everybody today is like, back in the day, you used to need to have like 20% down to buy a home. And of course, the first person you're going to ask if you're a young person is your parents. And your parents, if they haven't bought in a while, they think you need 20% down. What are some of the loan programs out there, and how much do you actually have to have put down if you don't have 20%, which is sometimes a pretty big sum?
Yeah, no, that's a great point, Tim. And I think often, you and I do this every day. So we don't think about, things, myths with the home buying process that, people might, encounter. So when it comes to purchasing your first home, I like to go basically with the major loan programs. A conventional loan, your down payment's going to be as low as 3%. An FHA loan, which is a government loan, as low as 3.5%. And then there's USDA, which is rural housing, as well as VA for veterans, which will allow up to 100% financing. So you'd be bringing 0% down payment, to the transaction. But on top of that, there's also closing cost fees as well as escrow fees, which we like to estimate to around 4 to 4.5%. So in total, depending on the loan program you're going with, you might be looking at, between 7 and 8%.
Okay, so 7 to 8% will get you into a house.
Sure.
And I don't know, I haven't looked at our notes too much, but
Mhm.
hopefully I'm not stepping on another answer that you're going to be having. And if I
Yeah.
do, please say so. But when it comes to those closing costs,
Mhm.
especially in this market that we're currently in, I mean, we're currently filming February 2021. There's very low inventory. The interest rates are ridiculously low for buyers. So there's just not a whole lot out there, and you have to really put your best foot forward when you're putting in an offer.
That's right.
So talk to us a little bit about what that seller contribution looks like, or not seller contribution, what the closing costs look like, and how maybe we can uh, ask for less from the seller, or how can we really beef up our offers to be strong, in putting in a multiple offer situation.
Sure. So there's plenty of ways that you can get creative. So, and if I'm not answering your question correctly, please let me know. Basically, when we have that conversation with the buyer, it's a pretty in-depth conversation. So we go into their assets, what they have available, and then once we identify what they have available, what they're comfortable with spending, right? Because once you get into the home, there's going to be plenty of other things you have to pay for, furniture and paint, sometimes, like minor improvements, those sorts of things that go into once you're finally in the house. So we want to make sure that you're not completely dried out, just to get the keys. So your funds for that can come from a number of different things. It can come from any personal checking or savings account, any investment account that you have the authority to liquidate from, whether it's a 401k or something like that. We can also accept gift funds from a family or relative. So there's plenty of ways that we can kind of, pull from a larger pot than, I just only have X amount in my checking account right now, and that's all I have available. So besides that, if there's, we're really tight on funds, we can ask for seller contribution. The competitiveness of this market oftentimes isn't going to, um, allow for that to happen as much as
Hmm.
it does in other sort of market conditions. So in those sorts of cases, it's possible that maybe we go a little bit above list price with our offer in order to justify the seller providing us with some funds towards our closing, and then the seller still nets what they expect to net from the sale of that house as well.
Yeah, that's an awesome answer. And when you get into these multiple offer situations, it's up to your real estate agent to really try to negotiate on your best interest so that you can put your best offer forward. And certainly having an idea of what that looks like is basically talking to a lender like Ben. So we basically covered number one. Okay, actually that was a lot. That was like a lot of bonus footage right there for just one question. So let's hit your second, like, most frequently asked question when it comes to somebody seeking your knowledge.
Yeah, so the second one that comes up a lot, and this is a pretty easy conversation, is what kind of fees or charges am I going to have to pay for prior to getting keys, prior to the
Mm,
settlement?
yes.
What goes into the transaction? And to that, it's typically three things. The first thing is your earnest money deposit, or your EMD. I feel like everything in the real estate industry is some sort of acronym. So I
Yeah,
always
right.
I always try to explain those as best as I can. So your earnest money deposit is typically it's between $1,000 and 1% of the purchase price. It's negotiated, as a part of your offer. So that's your first skin in the game or contribution to the transaction. The listing agent stops taking offers. You write that check for, let's say it's $1,000. It's held by the title company in a non-interest bearing account, and it goes towards your down payment. So the next thing you pay for is typically people get a home inspection.
Hmm.
Oftentimes it's not required, but I would say most people do. So I always put it into my estimates. Uh,
Highly recommend
but
it.
yeah.
Highly recommend it. Yes.
Exactly. The home inspection is for your knowledge, and they're gonna who you decide to use for a home inspector is going to explain their services and everything there.
Hmm.
Um, and then after the home inspection, once that's assuming that's satisfactory, and we still want to move forward with with the contract. We then order the appraisal to make sure that the home is valued for what we are lending upon. So those three things are the three things that you're going to pay for prior to settlement. So I always like to explain, say I give you an estimate, for this house, right? And, your total cash to close is $15,000, right? The earnest money deposit, the home inspection, and the appraisal, let's say those all equal to $2,000 in total, then you're going to be writing a check at settlement or wiring the funds at settlement for $13,000. So it's not like these funds are on top of the the estimate for your cash to close. They're a part of your cash to close. They're just paid prior to closing.
Right. I think another big question that I get as the real estate agent too is like, let's say the inspections don't work out, or, you find something that's crazy. Am I going to get that earnest money deposit back? And the answer is, absolutely yes, so long as you're staying within the timelines of the contract, which is our job as the real estate agent, is to make sure that you're staying within those timelines so that you do get that refund if things don't work out with the inspection.
Exactly. And that, all parties are aware of those sort of timeframes and everything there, so we can make decisions and, make sure we're staying on track.
Yeah, absolutely. All right, let's hit it. Number 3, most frequently asked question. What are we talking about?
Number three is about the credit score. And that is such a sensitive and broad topic. So I decided to kind of narrow it down to how does my credit score affect my mortgage?
Okay.
And as simply put as possible, there's going to be a minimum credit score for you to qualify for mortgage services. And for us right now at this point, that 620 mark is kind of where we say is the minimum credit score to qualify for mortgage services. Obviously, that's going to depend on some extenuating circumstances to that specific individual. Mm-hmm. But 620 is kind of a good benchmark for where we need to start. And then the differences, in your credit score, right? So once you get above 620, the difference between 620 and 700 for pricing for government loans is going to be very little difference. So if you're under 700, we'll say right now, you're probably going to go with some sort of government loan, such as an FHA loan. And then once you get above 700, we'd probably consider taking you towards a conventional loan. So the main difference between a conventional and FHA loan, besides a slight difference in the rate sometimes, is the mortgage insurance. And mortgage insurance is another kind of buzzword term that people hear about. And simply put, FHA mortgage insurance is a flat rate based off the loan amount, and it's for the life of the loan. 30-year mortgage, you're going to pay mortgage insurance for 30 years. A conventional loan, it's tiered off of your credit score. So the higher your credit score, the cheaper your mortgage insurance is going to be. And then your mortgage insurance falls off once you have more than 20% equity in that home.
Great. And that's, I think a lot of times we're going back to that 20% is, people don't want to necessarily pay mortgage insurance, but not a lot of people have 20% of, $500,000 in their bank account.
Sure.
So,
and it's important to go over these options, right? And run the numbers on properties in that price range that you're looking to purchase in, because, mortgage insurance is not this deterrent necessarily. So, mortgage insurance might cost you $85 a month, right?
Right.
Which isn't going to justify you, saving another 17% of that purchase price, before you purchase a home, right? So, it's just one of those things that you have to make a decision and be educated on, and that's our responsibility to make sure that they're informed.
Yeah, and to basically make sure that it fits that person's individual. What works for one person might not work for another person. So
that's exactly correct. We like to describe our services as tailoring a loan program around the individual, as opposed to just kind of saying this is the product that you'll go with.
That certainly makes sense to me. So, all right, let's go into number 4. Talking about what's the 4th frequently asked question. I got your notes here, so
you got it. Number 4 is about when we lock in the interest rate. So this is
Okay.
another kind of important conversation to have up front. Again, so much of my job is education up front because, like you said, I work with a ton of first-time home buyers. I work with a ton of repeat buyers. However, say you bought a house 15 years ago and you're a repeat buyer, things have changed a lot in the last 15 years. So it's important that we kind of go over these things in our initial conversations so that we're on the same page moving forward. So when do we lock in the interest rate? Short answer is we won't lock in the interest rate until we have a ratified contract.
Okay.
However, say we work with a lot of buyers who, we'll have our first conversation and they won't buy for 6, 12, 18 months at certain points, right?
Sure.
So they need to know that in that time, interest rates can fluctuate, the market's going to change a lot. So that's why it's our job to keep them informed, keep checking in, let them know where rates are, that sort of thing. That way, once we have a ratified contract, we can have a conversation about our locking strategy, deciding when we're going to lock, what we're going to lock at. And I like to make it a decision, say you're purchasing the home and I'm your lender. It's a conversation and decision that we're making together, based off of, the information that I have to provide you, instead of me saying, we're doing this now.
Right. Right. And again, there's other factors that are involved in that as well. And, certainly one of the options that somebody could have would be buying down an interest rate.
Mm-hmm.
So talk a little bit about, what that entails for somebody that doesn't know.
So Tim, if you don't mind, that kind of like flows into like the last point, which is about rate shopping. So
Well, then let's go to question number 5 then.
absolutely. Well, absolutely. So oftentimes, points is another big, mortgage buzzword. So what we try to do when we get shopping is going to be inevitable in this process.
Mm-hmm.
And again, I like to address it up front because it kind of takes some awkwardness off the table, I feel. If you don't address it up front, I feel like sometimes people feel like they're going behind your back in order to get a second opinion or something like that, which that isn't the case. It's, a huge purchase, oftentimes the biggest purchase people are ever going to make. So I'm comfortable with it. And I look at it as my responsibility to educate you on what you're looking at when you see another estimate, right? So to your point, buying down the interest rate. Okay. So let's round numbers. Say I'm providing you an estimate for 2.5% on a conventional loan costing you 0 points, right?
Okay.
And then you bank with a local bank or credit union or something like that, and they are offering you 2.375, but they're charging you, 3/8 of a point, right? That 3/8 of a point is going to increase your cash to close, and that's great. If that's something you're interested in, if that's something you want to do, you're comfortable bringing more funds to the table in order to have a lower monthly payment. That's great. At that point, I would have hoped to identify that as your goal. And all we want to do is have a fair shot, right? We want to compare apples to apples. And if it is someone that I've been working with for, a long period of time, again, 6 to 18 months, oftentimes we're seeing,
Right.
I just ask for that courtesy to have the last shot. So no one ever wants to get into a bidding war, knocking off $50 here and there, but we'll do anything we can to retain our clients, especially those that we've spent a lot of time working with.
Well, Ben, I do want to acknowledge you because you do such a fine job of working with a lot of our buyers. And, one of the most important things in, for a real estate agent is getting the deal to settlement, and with the least amount of hiccups. And at any point, certainly in the real estate world and in lending world, there's going to be, bridges that you need to cross at certain times and challenges. But you've always seemed to really, face those challenges head on, get on the ball right away. Your availability over the weekends, but even more importantly is just the way that you educate people. It's like you take the time to really, just really help somebody understand versus trying to push them down an avenue that they might not feel comfortable with. It's like you talked about, this is a team conversation here. It's not just, Ben's going to say, this is what you're going to do.
Yeah,
It's, it is a team effort, but you really help educate and take the time and the patience to help people in one of the biggest decisions that they're going to be making. And you only buy a house, maybe 3 to 5, 7 times, depending on, I don't know what the average is, but
sure.
people don't know the stuff off the top of their head.
That's right.
And that's why they need somebody that's trusting, that's patient, and that is willing to break things down so that they can understand at an easy level.
Yeah.
And you certainly do that.
Well, I appreciate that, Tim. It's that's very kind of you, and this is what I do it for sure. So I like working with people that I like working with, and I think we align well. And to your point about spending the time to educate, it's that end result that really does it for me. It's truly the borrower is empowered in making a sound financial decision.
Mm-hmm.
Once they're completely educated on the process, and there's no kind of um, stones that have been unturned, or there's nothing in the loan estimate or closing cost documents that they're unfamiliar with, or where does this number come from, or what am I paying this for. And so I just think it eases the level of stress, because we've certainly seen how stressful buying a home can be. There's a ton of moving parts. So anything I can do to kind of relieve some of that stress, and take some of that stuff off their plate, I'm happy to do it.
That's awesome. That's awesome. Couple wrap up questions that we're going to throw at you.
All right.
Okay. And we're going to be asking these questions throughout the show. The first one is you and Taylor. Taylor's is Ben's girlfriend. Woo-hoo.
Yep.
All right. So you and Taylor are going to be going out on a date, in
Yep.
the coming week, and you'll want to go out to a local restaurant.
Sure.
Where are you going to go and why?
So, this is a tough one, because I don't want to step on anyone's toes for sure. There's plenty of small businesses. Go out and support as many small businesses as you can, especially in
Absolutely.
times like these. But when you ask that question, the first place that comes to mind is 111 Main, right on Main Street in downtown Bel Air. And if it's a special night, a birthday or something like that, that's the first place I think of for sure.
What you going to order off the menu there?
I typically go for the fillet. Their fillet is out of this world. And talk about level of service. They're the nicest people in the world. And if you get a chance, go ask for Brian, because he'll take good care of you.
Brian, there you go. Shout out to Brian there at 111 Main in Bel Air. That's awesome. Okay, so here's one for you. I'm an avid reader.
Yeah.
Love reading. Do you like reading?
I do.
You do like reading. Okay, so what's one book that has kind of really shaped who you are in your profession as the man you are, as the son you are, as the boyfriend you are? What's one book that you highly recommend that really kind of changed who you are?
So it's one I read this year. I'd say it's "Can't Hurt Me" by David Goggins.
David Goggins.
Are you familiar?
I am. In fact, if you have a minute, search David Goggins in YouTube, unless you have sensitive ears towards,
Yep. Yeah.
explicit vocabulary.
Yeah. He has been through a level of adversity that is unfathomable for what I've been through in my life. But it was written in a way that you could compare it to the things that you've been through, right? And everybody's story is a little different. Everyone's been through different things, and just the way that he has handled adversity, and takes the type of mental approach that he takes towards any kind of challenge that he has faced. For those who don't know, he's a Navy SEAL. Not only a Navy SEAL, he was, I believe he's the only person to graduate from BUDS training, Navy SEAL training. He's an Army Ranger. Yeah. And Air Force Special Forces. I'm sorry, I forget what the title of that is, but he did all three of those Special Forces trainings and graduated with flying colors, and defeated a bunch of other obstacles in his life. So if I can take just a fraction of his mental toughness, I think well.
Yeah, no doubt about it. Yeah, you think about some of the things you complain about, and then you think of all the things that he has gone through. After you read that book, you're just like, stop complaining.
I'm okay. I'm gonna be all right.
I'm gonna be all right. I'm gonna be all right. All right. Last question for you.
Yep.
Okay, you get the honor today, or pay tribute to one person, maybe two. You can keep it to one. That has really made the most influential impact on your life. And today you get to tell the world about this person and why they're so amazing. Who would you like to pay tribute to today?
So first off, I'd say that professionally, I've had a number of mentors that I attribute a lot of my success to. I've worked for some great people, and have a lot of respect for them. But there's no way I could answer this question with anyone else besides my dad, Pat Richards. He's just an incredible role model. The things that he's kind of taken on, in my life. He's just to kind of sum him up briefly. He's got a famous saying: "You said you wanted to be one." So he was never really one to make us do anything that we didn't want to do. But if we said we wanted to, be a great lacrosse player or be a great student, and it was Sunday night and we didn't feel like going to practice or didn't feel like doing any homework, it was, you said you wanted to be one. So that's something I think about. Like you said, it's a Sunday afternoon and someone's going to go grab beers to watch the Ravens game or something like that, and I've got some work to do, or I know that I've got some clients out shopping, and I said I wanted to be one of the top producers in the in the state of Maryland, and I said I wanted to provide an excellent level of service. So that's something I think about that every day. So I would certainly say my father is the most influential person in my life.
Mr. Pat Richards, you got a pretty special son right there. Thank you. That was awesome.
I successfully didn't tear up on your first episode of the Mark.
It's getting emotional here. I'll tell you, got me thinking about my own dad.
Yeah.
So, well, as far as lending, as far as finding out more about mortgages and possibly getting pre-approved, how can people get in contact with you?
So hopefully there's a way where I can put my information attached to this podcast when we release it. My cell phone is everywhere, and I don't keep an office phone for that same reason. Anytime a client needs me, I'm going to be available. Make sure I'm available. So call, text, email. I'm on social media: Facebook, Twitter, Instagram. Not on TikTok or anything like that yet, but maybe someday.
That's what we got to do. We got to put together a TikTok.
Oh man, I don't know if you want me on TikTok.
That would be hilarious. Well, Ben Richards from Sierra Pacific Mortgage, thank you so much for joining me on this show. You're a wealth of information, and I'm so thankful for you to take the time on a Sunday to record this. I appreciate it.
Tim, it's been an honor, and I can't thank you enough for all that you do. Not only for our clients, but just as a personal friend, and I really value having you as a friend and a referral partner. So thank you for having me on here. And,
amen, brother.
I look forward to great things in the future. Absolutely.
Hey, take care. Listen, everybody. Again, reach out to Ben if you have any mortgage questions or pre-approval questions. And again, if you have any real estate related questions, certainly you can reach out to us. We are the Markland Advantage, and we're everywhere on social media. Just type it in. Ladies and gentlemen, again, thank you so much, Ben. Until next time, live life to the fullest, folks, and we'll see you soon. Take care.
Yeah.